The most radical claim in markets right now is not about interest rates, inflation, or AI chips. It is this. Tesla will mass-produce humanoid robots at a factory originally built for luxury sedans. SpaceX will launch those robots to Mars on the most powerful rocket ever built. And together, they will establish the first permanent industrial base on another planet. This is not science fiction. The factories are being converted. The rockets are being tested. The IPO prospectus has been filed. And the data behind each of these milestones is verifiable. But the gap between the vision and the execution timeline, that gap is where the investment opportunity lives. I'm Daniel Reed. This is Market Lens. Let's get into the data. Let me start with what is happening right now, today, at Tesla's Fremont factory. In early May 2026, Tesla permanently ended production of the Model S and Model X, vehicles that defined the company for 14 and 11 years respectively. Combined lifetime production of both models was approximately 610,000 units. Recent annual output had dwindled to roughly 30,000 units. Tesla is dismantling those production lines and installing entirely new equipment for Optimus Gen 3. The target? Low-volume production starting in late July or August of this year. The first-generation line is designed for 1 million robots per year at full capacity. A second dedicated facility at Giga Texas is already under construction, 5.2 million square feet, targeting 10 million robots per year by summer 2027. Here is what Gen 3 actually is. 50 actuators across the full body, up from 28 in Gen 2. 22 degrees of freedom per hand, targeting human-level dexterity for fine manipulation. The body weight dropped 22% to 57 kilograms. It runs on Tesla's AI-5 chip, described by Musk as the best edge compute inference chip in existence. Voice interaction runs on Grok. All AI training runs on Cortex 2.0 at Giga Texas, whose first 250-megawatt phase came online in April. Several hundred Gen 3 units have already been produced in Q1 2026 for internal deployment at Fremont and Giga Texas. Gen 3 hands began 24/7 factory deployment in Q2. The goal? First external commercial customer announcements in late Q2 or Q3, with revenue-generating deployments by 2027. Now here's the reality check. Every Optimus milestone has slipped. Musk predicted 10,000 units in 2025. 0 were doing useful work. The Gen 3 reveal was delayed from Q1 to mid-2026 because Musk says competitors do frame-by-frame analysis and copy everything. And Musk himself said initial production output is, quote, literally impossible to predict, because Optimus has 10,000 unique parts with 0 supply chain overlap from Tesla's vehicle business. But here is what is different this time. The factory line conversion is physically happening. The Model S and X lines are gone, the floor space is being rebuilt, and Tesla's 2026 capital expenditure guidance is now $25 billion, up from $20 billion just 1 quarter ago. That capex is going into AI compute, Optimus factory build-out, and the Cybercab production ramp. Tesla is spending at a scale that only makes sense if Optimus and autonomy deliver material revenue. At the target price of under $20,000 per unit at scale, the economics are transformative. Morgan Stanley estimates the Gen 2 bill of materials at $50,000 to $60,000. Tesla needs a 60 to 67% reduction to hit $20,000. That requires massive scale, vertical integration of actuators and batteries, and the Gen 3 design for manufacturing approach. If they hit it, a robot that costs roughly $1 per hour to operate versus $25 to $28 for a fully loaded human worker produces a payback period of under 3 months. If they miss, and initial units cost $50,000 or more, the payback stretches to 5 years or worse. The numbers that matter. Morgan Stanley projects the humanoid robot market at $5 trillion by 2050, with 1 billion units deployed globally. Goldman Sachs projects $38 billion by 2035, up from a prior estimate of $6 billion. Fortune Business Insights projects $165 billion by 2034. Even the most conservative estimates imply a market at least 10 times larger than Tesla's entire current automotive business. On February 9, 2026, Elon Musk announced that SpaceX was pivoting its focus from Mars to lunar development, delaying Mars ambitions by what he called 5 to 7 years. The original plan was 5 uncrewed Starship missions during the November to December 2026 transfer window, carrying Optimus robots to establish a beachhead. That plan is postponed. Not canceled, but postponed. Here is what SpaceX is doing instead. The company filed its S-1 prospectus on May 20th, 2026, targeting an IPO on June 12th at an implied valuation of approximately $1.75 trillion. The filing reveals financials for the first time: 2025 revenue of $18.7 billion. Starlink generating $11.4 billion of that at 63% EBITDA margins. Starlink now has over 10 million subscribers across 164 countries and operates roughly 75% of all maneuverable satellites in orbit. The launch business, Falcon 9, Falcon Heavy, Dragon, generated $4.1 billion in revenue, but lost money because Starship research and development consumed $3 billion of operating cost. Starship is the single most important execution risk in the entire prospectus. It is listed as the first risk factor. But the Starship technical trajectory is real. Version 3 of the vehicle stands 124 meters tall when fully stacked. It generates over 17 million pounds of thrust, more than the Saturn V. It can deliver 100 to 150 metric tons to low Earth orbit in fully reusable configuration. The planned Starship-to-Starship orbital refueling demonstration is scheduled for later this year, the critical enabling technology for Mars transit. The Mars architecture remains intact as a long-term plan. The vision: 5 uncrewed Starships in the first window, 20 ships in the next, 100 in the third, 500 in the fourth. Each Starship carries 100 to 150 tons of cargo. Optimus robots deploy solar panels, set up the in-situ propellant production plant using the Sabatier process to convert Martian CO2 and water ice into methane and oxygen, assemble habitats, and survey for resources. The first human passengers land on a planet that already has shelter, air, water, and return fuel waiting for them. The transit time is approximately 90 to 150 days. A peer-reviewed paper in Scientific Reports in May 2025 confirmed that 90-day Earth-to-Mars trajectories are technically feasible using Starship's projected capabilities. That is 3 months, not 9. Aerospace America reports that once on Mars, a crewed Starship would require approximately 600 kilowatts of power to produce the 600 tons of liquid oxygen needed for the return journey. That is roughly 7 American football fields of solar panels, or 1 nuclear reactor. Optimus's job is to deploy and maintain that infrastructure. Here is where the user interpretation and the data converge into a coherent thesis. The argument is that Tesla mass-produces Optimus, SpaceX launches those robots to Mars on Starship, and together they bootstrap a self-sustaining, off-world industrial base. Musk himself said it in February 2026. Optimus will be the first von Neumann machine capable of building civilization by itself on any viable planet. A von Neumann machine is a self-replicating system. It uses local materials to build copies of itself. On Mars, Optimus would mine regolith, refine metals, 3D print actuators, and assemble new robots. 1 unit becomes 10, 10 become 1,000, and each generation expands the colony's capability without requiring additional launches from Earth. This is not the plot of a novel. It is the stated engineering roadmap, and whether you believe the timeline or not, the capital allocation is already happening. Tesla is spending $25 billion this year alone. SpaceX is going public at a valuation that prices in Starship's success. The factories are being converted. The supply chains are being qualified. The AI training infrastructure is online. If you accept the thesis that Optimus becomes the highest volume humanoid robot in existence and Starship becomes the backbone of interplanetary logistics, then Tesla and SpaceX together represent the most consequential industrial convergence of the 21st century. But the timeline risk is real. Here are the 3 numbers you need to track. Number 1, 2027. That is the earliest year Tesla expects Optimus to be generating revenue from external customers. If that slips to 2028, the bull case for Tesla's valuation, currently priced at roughly 198 times forward earnings, becomes very difficult to sustain. Number 2, June 12, 2026. That is the expected pricing date for the SpaceX IPO. If the public market accepts the $1.75 trillion valuation, it validates the Starship thesis. If the market pushes back, it tells you the gap between vision and execution is wider than the underwriters expected. Number 3, the end of 2026. That is the next Mars transfer window. SpaceX has pivoted to lunar development, meaning the window will likely close without a Mars launch. But Starship's orbital refueling test, scheduled for this year, will be the single biggest technical indicator of whether the Mars timeline is measured in years or decades. Let me leave you with the framework that matters. There are three scenarios for the Tesla-SpaceX industrial supercycle. Scenario A. Everything works. Optimus reaches production scale by 2027. Starship completes orbital refueling by 2026. And the first uncrewed Mars landing happens in the 2028 to 2029 window. By 2033, hundreds of Starships are launching per window. Tesla's robot business generates revenue larger than its automotive business. SpaceX validates a multi-trillion-dollar valuation. In this scenario, the combined Tesla-SpaceX ecosystem becomes the most powerful industrial enterprise in history. Scenario B. The timeline stretches. Optimus reaches external customers by 2028, not 2027. Starship takes longer than expected to master orbital refueling. The first Mars landing shifts to the early 2030s. The underlying technology still works. The economics still compound. But the market loses patience with the gap between promises and delivery. Tesla's multiple compresses. SpaceX's post-IPO stock trades below the hype. Thoughtful. The value creation happens, but over a longer horizon than the bulls expect. Scenario C. The vision hits real physics. Humanoid robots are harder to generalize than the demos suggest. Mars ISRU requires technology readiness levels that don't exist yet. Starship cannot land a 200-ton vehicle on Mars without qualification flights that cost billions and take years. In this scenario, Tesla Optimus remains an internal factory tool, SpaceX's Starlink carries the valuation, and Mars colonization is a 2040 story at best. The data supports scenario B as the base case. The capital allocation is real. The engineering progress is measurable. But the timelines have always been aspirational, and the gap between Musk years and calendar years is well documented. Here is what I am watching. Optimus Gen 3 first external customer announcement, expected in the next 60 to 90 days. Starship orbital refueling demonstration, expected later this year. SpaceX IPO pricing on June 12th. Those three data points will tell you which scenario is playing out. The vision of robots building cities on Mars is the most audacious capital market story of our lifetime. The question is not whether it happens. It is whether your time horizon matches the execution reality. Keep your data sharp and your logic sharper. I'm Daniel Reed. This has been Market Lens.